Hey, what's up, everybody? Ted here. My name's Wix. I just wanted to follow up on yesterday's video that I did on EURUSD because I was doing some forex. I'll be focusing on crypto today. Uh, Maybe I'll focus on EURUSD again tomorrow. But after that, it's non-farm payroll week. Anybody that trades forex should probably actually take advice from my mentor and never trade anytime after 10 a.m. Eastern time on Wednesday on non-farm payroll week. Why? Because that's when forex anyway. Crypto's a little bit different, indices a little bit different, commodities a little bit different, but forex, that's when the excuse me, that's when the algorithm gets a little wonky, All right. So let's head on. Well, maybe let's head on over here. Thought I had a. I always do this. I always think I have everything set up, and then as soon as I go to it, it's not set up. I don't know. I don't know, guys. Anyways, it looks like I got it set up now. So let's just. There we go. All right. So this is what I did last night. We had the Asian range all marked up. Why do I have the Asian range marked up? Because that gives you a good sense of how far this is likely to go. All right. So generally, the price point tries to hit at least, I should say, not exactly 4 Asian ranges, but usually about 4 Asian ranges, sometimes 5. If the Asian range is like extremely large, like say almost 50 pips, then I would consider possibly even, taking a step back, not trading, or if there is an area to where you think it's going to attack, such as like a liquidity area, a fair value gap, something like that. Cut those Asian ranges in half and use that as your gauge, right? So, what actually happened is, even though I started, me personally, I did this last night, right? You guys watched me, and I said, boom, this is where I'm going to enter. Why did I enter here? Because I thought it was going to fake people out, right? And then go down. And then I thought maybe tomorrow it might break this liquidity. But no, it did it in the middle of the night. And it did it just above, one deviation above the Asian range. So I could have been, if I'd have been a little bit more risky, I could have actually put my entrance. These are just things that you're just gonna have to watch for. If you think it's gonna break that liquidity, and I haven't said it last night. I may even splice this in here from what I said last night. I said it could actually break that liquidity and then go down during London. I said that. Rewatch the video from yesterday, and it did. So and then I said, from that point, I said, it's probably going to head for this little fair value gap, which is also a breaker. Well, actually, it's more of a mitigation instead of a breaker. Sorry about that. So where people, like I said, push this down really hard and then push it up really quick. A lot of short positions were left right here. So they were going to come back for that position. Why? Because then they can release their short position and then go long. But they're not going to go long just yet. Why? Because they were even more ambitious. They went for the 15-minute fair value gap that was down here, which is, oddly enough, the 5th Asian range. It's dead even with the 5th Asian range. So I don't know if this is going to fill completely. Now that pretty much the trading day is over, It is almost 2 o'clock. It's 1:25 Central Time. Generally, trading is done by now, or at least it should be. Why? Because the England session is done. The U.S. session is coming near to a close. Bonds close at 3 o'clock um, um, Eastern time. So that's why 2 Central would be a good time for to stop trading, basically. So everything I called, I nailed. So I was surprised, and honestly, whenever I woke up, it was probably somewhere around 7 o'clock or so, and yeah, and I saw it up here, and I was almost like, oh man, I missed it because it got so close to where I put my target, and then it backed away, and I said no. I said it's one of those things it is one of those things you have to learn to hone in the psychology of this, right? Because that is the hardest part of trading, is the psychology, right? You have to learn that, hey, this is aiming for something, right? Even though it came close, you know what it also did after I thought about that? Boom. That is what is called liquidity. You see just 2 spikes. You got this spike here, right? And let me, I should have this really cool. Oops, didn't mean to do that. I meant to do something else. Let me see if I can find it. I have like a pointer thing. And it's not wanting to launch for some reason. Anyway, I'm not going to worry about it. Basically, it just highlights where I point. Oh, there it is. Okay. But trend line. Okay, so I put trend line there. So we are going to do this. Money signs, liquidity, money signs. Why do I put money signs? Because right in that area, right, where it came down to and then backed away from, right, what that said was that told your typical retail traders that this is a safe spot, right? This is a safe, very, very safe place that is going to be support. So you don't have to worry about the price getting lower than this because it's going to be a safe spot, right? Right? And it's not. It's not at all. So that's why it does that. That's part of the algorithm. This is something you guys need to learn. If you haven't learned it already, I've told it a million times. Anytime you think that there is going to be a safe spot, or for where it looks like it's going to be a good support or a good resistance in the short term, it's probably not. Your resistance and your support are going to be on your longer, your bigger time frames, your monthly time frames, your weekly time frames. That's where actual support and resistance is, not a 15-minute time frame. I'm sorry. So it came down here, it hit this, and then I saw, okay, so the next time it comes down, there's going to be a lot of people sitting here waiting to buy, right? They're going to be waiting to buy, and they're going to be having a short stop loss because they think this is going to be safe. So what did it do? Whoom, right through where I thought it was going to go. I just thought it was going to hit this and then possibly bounce up. So I actually cashed out right around here. I originally put my exit at 5855. Yeah, 5855. And then once I saw where it was once I saw this, I knew it was going to jump down even lower. probably get below this here. I thought it was going to hit the body of this guy, right? And that was going to be it. And I thought it was going to start retracing from there. So I then turned around and re-put my exit as 5840. So that it may not be a huge difference, but that's a pip and a half, depending how much you put on your leverage and on your on your trading size, your lot size. One pip can be a lot, and it was for me. Just saying. Anyway, this is not trading advice. This is just my experience. And then so after it broke that liquidity, it came back up, and then it looked like it was going to try to go the other way. And I left a little piece on, and then after I left a little piece on, what I did is I came down, I closed my stop loss, and I even moved my stop loss a little bit further down. Where did I move my stop loss? I moved it down to just above the original Asian range. Right around there is where I put my stop loss. All right, so in case if it ever did come back, I was in the green. I was fine right around the original Asian range. I believe it was 6030 is where I put my my stop loss in the green. So it even came down further. I took off 80% of my trade at this level, which was 5840. I left 20% on. Once it hit, I was watching it, and once it came down into this 15-minute fair value gap, I thought it would probably get to. I honestly thought it would. Okay, so once you get into fair value gaps, you got to start thinking about the halfway point. Halfway point is a specific word for it. Let's just call it what it is, the median, right? So there's the median of the 15-minute fair value gap. It didn't quite reach it. So I was holding on to it until really just now. I went and I put once I realized what the 15-minute fair value gap was, I put the limit at the next entrance. So as long as it got back to the 15-minute fair value gap, then the rest of my 20% was going to be gone. Trade was over. Boom. So that is exactly what happened. So I took instead. Okay, so my trade was. Well, I don't really know. Well, it's not going to show me. It was starting right around here, I believe. 6075. I think it was something like that. Okay, so I took 6075. And then this was my first take profit, about 23 pips. And then 80% of that. And then my second take profit was here, 30 pips. Hey, 30 pip day. Can't beat that. All right. So just wanted to show you guys that this smart money stuff does work. It is an algorithm, and this is how you find it. Right? You got to look for these fair value gaps. You got to look for these order blocks. You got to look for these Asian ranges. You got to put it all together. You got to realize where the liquidity point is, right? And like I said, it broke that liquidity point and then boom, just dropped. Why? Because people were either going to try to catch a breakout above it, or they're going to try to, call short just below it. and then also have a short stop loss. That's what most people do whenever they see things like this. They have a short stop loss. And then as soon as it has a short stop loss and it breaks right through it, it takes those people out. So instead, I just called short right there at 11. When was it when I made this? Late last night? I don't know. And then boom, let it ride. 80% at 26 pips and then 20% at 30 pips. And I am a happy camper. At this point, I think we are going to be going bullish from this point on throughout the week. Just because we've hit daily order block, we've hit 4-hour order block. I was, like I said last night, I was wondering if we're actually going to get down here today. Didn't think we would. This 15-minute fair value gap is good enough. Tomorrow we won't see probably much happening. I mean, you know, it's gonna try to set up something for sure. It looks like it came up this high because it looks like that was exactly half of, a little bit more than half of that 15-minute fair value gap right through here. You see that 15-minute fair value gap? So that would be here to here. There you go. 15-minute fair value gap. Draw that all the way across. That's why this pops up into it a couple times. That's why I always say fair value gaps are like, magnets. They are attracted to it, but then it's almost like when you twist a magnet around, they withdraw really quick. It's exactly what a fair value gap is. So as soon as they attract, and as soon as they get inside of it, boom, flip it over, withdraw. Or they just run right through it. But that's if it's a breaker, and that's a different scenario altogether. So here we go. This could be a breaker, to be honest. I mean, no, I don't think it. I don't think this is breaker material. What would have to happen is that this right now, what it's doing, reason it's stalling, it's stalling just below that one little break area. Also stalling just below this bearish order block. Bearish because it's it's the start of the last of the bullish movement up before it drops. So I wouldn't be surprised if we see it get all the way up here by 6 o'clock and then stall. It's kind of usually attracted to the end of the day as to what happened yesterday. So where was yesterday at 4 o'clock? Oh, way up here. Okay. I don't know. It could. It very well possibly could. 4 o'clock. Well, no, that's 2 o'clock. Hello. There's 4 o'clock. Right around here is 4 o'clock. So it could be getting back up into this area, in a couple hours. And then I would think that would be setting itself up for a run higher. Right. So I definitely think this is going to set itself up for a run higher. Okay. Today I will be focusing most of my time. I'll definitely be watching Euro, but as we all know, what's going on with Ether? Made another high. All right, so we are on the verge. I mean, I'm pretty sure this is definitely all-time high of highs. Let's go to the daily to find out. Well, I am on. Let's go Coinbase just to be sure. Ethereum, daily Coinbase. Yeah, we're at all-time high of highs right now. So I'll be focusing on that. That'll probably be my next video, and I shall see you all later. Thanks for watching, and remember to always keep those pants on, guys.